Hello traders, John Hayden here. For those of you who still don't know me from past webinars, I'm 30 years old, been trading for almost 12 years now, and I started my path as a financial advisor in one of the biggest banks here in the state. Today I'm trading for a living, long and short-term positions, mainly Forex, stocks, and commodities. In today's session, I will focus on a recent upcoming event that can affect our entire trading strategy. The topic will teach you guys what to do when future events like this happen, and of course understanding in depth how US can affect us, even if you don't trade Wall Street stocks, but rather you trade gold or whatever it is. So, as one can already guess, I'm talking about the Fed's decision that takes place on September 16, whether they should raise interest rate or not. First of all, I know some of my listeners are just starting their first steps into the wonderful world of trading. So before I go into more complex topics, I want everyone to be on the same level. So here is the interest rate. Will it go up or will it go down? September 16. Write it down in your calendars if you didn't know what's happening. Very important date for traders, and I want you guys to understand why. So, what is this? What is interest rate basically? Keeping it as simple as possible, interest rate is the amount of money we pay for our loans or credit. The price of money affects not only us, the small consumers, but also big companies which borrow money on a daily, monthly, weekly, yearly base. It can be millions of dollars that they borrow, and the interest rate will basically will be the cost for these loans. So, as you can see, interest rate affects the entire market. The central bank of every country uses the interest rate in order to control many variables in their own country, such as the unemployment rate, inflation, investments, or stimulation of the market. In the US, the body which controls the interest rate, called the Federal Reserve, or as you might know them, known as the Fed. Just for your knowledge, one of the most influencing women in the US is Janet Yellen. She is the chair of Board of Governors of the Fed. If it's the first time you see her, that's Janet Yellen. She seems like a very nice lady, and she has so much responsibilities on her shoulder. It amazes me every time I see her speeches. Yeah, of course, that's a bad joke that I wrote. Oh, I jumped too quick. So now that we understand the basic terminology, I want to dig deeper. I want to dig deeper into what is going to happen on September 16th, and why do we care about it? So back in 2008, US were facing an aggressive recession, made all US leaders stand on their feet and react before it will be too late. Even though in my opinion it was too late when they reacted, but who cares about my opinion? Feds took the lead and decided they should aggressively start with the quantitative easing program. And of course, sorry about that, guys. Someone just interrupted me. And one of these moves out of the program was basically cutting down the U.S. interest rate from 3.5% to zero. That's madness. As you know, we are still standing nowadays on a zero interest rate, and that's why everyone is now looking to see what Janet Yellen will decide. Later on, I will explain how interest rate affect each market we trade, but just for the understanding, that move stimulated the economy and created the 6-year rally that we can see over here. Took that picture for pre-stock charts. You can see the SP 500, which is the 500 biggest companies of the U.S. It's one of the greatest index that shows us the direction of the market. You can see here, starting over from 2008 till 2000 and almost 16, there is a huge rally, barely no correction. You can see here one correction, but that's not enough from here to here. And every candlestick shows us a monthly time frame. So that's hysterical. There is no correction, and something different should happen right now. So why would they cut interest rates? The main purpose of cutting down the interest rate is to make the market, or we're actually talking about the past or what happened in 2008 and why did they, it's not why would they, it's what did they, why did they cut the interest rate. So they basically cut the interest rate to make the market healthier, to bring inflation into a higher level. Back in the day, it was around 2%. Make consumer, or basically us, feeling of wealth, having extra money at the end of the month, made consumer like us to spend more money, and by this they could stimulate the market. People took their investments from their low rate deposit account and took it straightly to the stock market, and that's the reason. Back to the graph, and that's the reason we see that rally over almost 8 years now. So that's the main purpose, and why did they cut the interest rate back in the recession? So now, almost 10 years later, the market is recovering and almost can say fully recovered from the recession. So the main question we should ask ourselves is, what will happen if the Fed decides to raise interest rates? Before I start, I must say that many analysts believe that the Fed might postpone the decision to early 2016, mainly due to the big drop market faced and the fact that everyone is still worried of China and the slowdown of their economic growth. So just for your knowledge, it's important to know it might happen. They might change the date, but it doesn't really matter for us. If they will change the date, we will just change our strategy and we will see how can we trade the later announcement. So who should really pay attention for the decision? I want to go through some important markets that I find very interesting, starting with the Forex traders. So all Forex trader, or if you trade binary options, all markets here will be relevant for you, because the privilege of trading with binary option is that you have many different assets. When I started trading, I only had stocks. Later on, I started trading Forex. But here you have commodities, you have Forex, you have stocks, you have everything, every asset you can imagine. So it's great for you, and that's why I wrote on every market. So let's start with the Forex traders, and of course you guys take the important points for your binary option trades. And so Forex traders are waiting for the announcements like wolves. Every trader knows that changes in interest rate, even the smallest one, can cause high volatility, since higher interest rate increases the demand for the certain currency. In our case, we're talking about the dollar. And of course, that's because investors know that if they will invest on a specific currency, they will get higher returns. So let's say that next week the Fed decides to raise interest rate. The move will make the dollar stronger compared with every other currency. Okay? So in trading, and I wrote it down in here. You can see different words. Basically, what the paragraph here says that people basically speculate what will happen, and as investors, expectation during the year for higher interest rate, the dollar already gained a lot of value during that year. But still, analysts expect that the announcement itself on September or early 2016 make a strong move. Okay, so as I wrote over here, uh, the graph is already showing the movement. Even before the announcement, the direction is already being set. It doesn't matter during that period of the announcement, let's say it's the exact day, we will see high volatility, which is good for us because we can make fast money out of the announcement. Stock market and the impact of interest rates. Are we expecting a soft landing or maybe a strong earthquake? The monetary policy of the central bank has a great influence on the stock markets. Usually lowering down interest rate can cause a positive movement for the stocks. The basic explanation for that is that with lower interest rate, people stay with more money at the end of the month, and that's eventually lead to higher spending or more revenues for the company. Let's say at the end of the month, I have $500 more. I buy a new iPhone, or I go and buy a new Sony TV. It doesn't really matter what I buy, but of course, low interest rate, more money for us, therefore we spend more money on goods. Another reason is that when lower interest rate, the deposit accounts in the bank are less attractive. If you put $200 every month on your deposit account in order to make the bank rate, I don't know how much they give you, 0% on your money there, it doesn't worth it. Okay, people, everyone wants to know how to make $2 out of one without putting any effort, putting working. So when they lower down if they lower down interest rate, it will make people to go straight into the stock market. So lower interest rate, good for stock market. Continuing with the big questions I pointed out before, are we about to face an earthquake or a soft landing into the outer world of the zero interest rate? Basically, the Fed is trying to hint us during the entire year that a change of interest is definitely something that can happen. In Janet Yellen's speeches, she always tries to give investor the feeling the U.S. is healthy, unemployment rate kept low, and the purpose of it is basically to make us or making the decision of raising interest rate easier. And will it work? I have no idea. We have to be patient and wait for the announcement date. The third market is the commodities. Is the price of crude oil will keep its downtrend? Well, of course, interest rate has a straight impact as well as on commodities market. Then mainly due to the fact higher rates will cause less spending on consumers' goods like food, oil, etc. As you could understand from here that every change in the consumer's salary or money will have at the end of the month, of course, affects every market because it is the biggest. I'll say it. The consumers are basically the reason for changes in price. Because if I won't spend money, if I won't buy an iPhone, if I won't buy food, if I won't go on vacations, then everything will fall down. It's like a cycle. Okay. Some analysts even say that the last time the Fed postponed interest rate announcement was due to the fall of crude oil prices. So earlier this year, Fed decided that they want to raised interest rate already, but they decided to postpone the date for now, for September. The main reason for it was that the crude oil was already in a crazy, I think it was around 40% drop. Uh, it has nothing to do with the interest rate, but the supply of crude oil was flooding the markets, and that was the reason for the low price of crude oil. I'm not going to enter that topic; that's a huge topic by itself. But that was the main reason the Fed postponed the event earlier this year. For the gold, I wrote down in a point here. Gold is not included because there is a negative correlation between the price of gold and the U.S. market. When market is going through a panic attack, investors find gold as an attractive and safe investment. When people see everything goes crazy, they go and buy gold because gold, since hundreds of years, always seemed something solid, something you could see, something a good investment basically. Okay, so there is a negative correlation. So if interest rates will go higher and stock market will fall down, we'll see the gold price going up like crazy. So in conclusion, make sure you have enough money to invest when the decision is made. Once the interest rate will affect market, we will have many opportunities to make either put options or call options. So as a short or long-term investor, it doesn't really matter which side we go, down or up. The most important thing is the direction. Once we have one, making money is a piece of cake. Okay? There is no doubt that the raising of interest rate after 8 years from zero rate will be a big historical act. It will affect the market for sure. What will happen? In my opinion, money won't go outside the US. It might change its path to a more solid invest. Good advice to build up your strategy is basically, as I say, to have money in your account, because we will have many opportunities right now to trade and of course to make quick money. As I said earlier, high volatility is great for me. I want it because with high volatility I can make fast trades, trades that I don't need to go to sleep with. I don't want to leave trades during the night. I want them to be over. I want to know that I made my $500, $700 daily. That's it. I'm done. Tomorrow it's another day. Okay. That's it for today, basically. Hope it was educational for you, and if you have any question, it's the right time to write them down. So, Mark is asking, why should they raise interest rate? I mean, everything is perfect, market goes higher, people make money out of their investments, so why? Basically, Mark, the answer is simple. Higher interest rate equal more money in the government's account. That's as simple as it gets. But another reason is that they don't want the price to go higher and higher. They need to keep inflation rate between ranges. So, as I said, interest rate is one tool that the Fed has in order to control inflation, unemployment, etc. Stephanie is asking, thank you so much, John, for the webinar. First of all, you're welcome. My question is, what should I do with my account? Should I not trade till the announcement? Well, Stephanie, I can tell you that I will trade until the event. We still have many other possibilities, such as short-term trade, 30 seconds, 60 seconds. It can be risky to trade now for long term, but for short term, it's perfect. I love the high volatility. It makes me money fast. I've been saying it so many times, and I'll keep saying it. Jack is asking, uh, how did you follow the graph and what was about to happen? Okay, great question, Jack. Basically, what you're asking is how I found out all this information, or doing the technical analysis I did was basically, I have one thing to tell you guys. At the end of the day, I want you all to be smarter investors. I use the technical analysis approach in my trading for those who are just starting their first steps and you don't really know what technical analysis is. I truly suggest you will go over free trading program. It teaches you from scratch all you need in order to trade using the technical analysis. And for the other information, it comes from experience. I mean, it's not the first time that I'm facing raising interest rate. After this webinar, if let's say like today, which the Bank of England decided the interest rate, now you know what will happen, which assets you should trade, etc. So you learn it, you read many articles, and at the end of the day, your common sense is you basically become a smarter investor at the end. Well, that's it. Good luck for everyone. See you next year for another educational session. Tomorrow I'll be here around 2 p.m. with a quick trading session. So uh, go make some money. Best wishes for you traders. And if you did not, if you're still fearing of opening an account, I hope this webinar was useful for you, because I think it's hard to do the first steps of trading, of opening the account. That's something you struggle with. I remember the first time I deposited something around $100. I lost them in, I don't know, 3 days. And it made me feel really bad until I decided that I want to understand everything. I want to know how this market goes. I want to know how the big guys like Warren Buffett are making their fortune. And after I understood that, and I deposited something around, I think that my first account was something small, around $2,500, and things got better for me. So I hope it was useful for someone who are fearing to open an account. And of course, I'll see you next time. If you have any question, you can email them to me.